Welcome back to the Bitcoin Layer. Today we are answering your questions, the viewer. We really appreciate all the questions that you've asked in the comments over the first couple months of the Bitcoin Layer YouTube channel. So today I've picked 4 questions that I'm going to answer. Let's get right into it. Jason asks, assuming that rates on treasuries have topped, what probability would you ascribe to the Fed continuing to tighten, as they've been clearly communicating is their intention, and ignoring the rates market? The this time is different variable I'm considering is the multi-decade high in inflation. So he's curious about our thoughts. So Jason is asking, what is the chance that the Fed keeps tightening and ignores the rates market because of multi-decade high inflation? So I ascribe the probability pretty low that the Fed will continue to tighten beyond a certain point. So we're going to get a 75 basis point hike in this July meeting, and we are going to have potentially another 50 to 75 basis points of hikes in September. But really, once you get beyond this current 75 basis point July rate hike, we really don't know what the Fed is going to do. We don't know how much financial conditions are going to continue to tighten in other parts of the economy, and we don't know forward expectations for inflation. So I want to point you guys to this chart here. We have the 5-year inflation swap. This is the Fed's preferred metric for inflation. Now, 5-year means that we're looking at inflation for a 5-year period, but starting in 5 years from now. So this is not the next 5 years of inflation. This is years 6 through 10 of inflation expectations. Now, I know it sounds a little funny, but this is actually what the Fed cares about most, because the Fed is forward-looking. They want to know that inflation expectations are anchored and not getting out of hand. When they see that inflation expectations are not getting out of hand, that's how we know that they will slow down their tightening, meaning they will stop hiking rates, and they will let the economy digest the latest tightening that they've done, basically going from 0 to anywhere between 2.5% and 3%, which is where we'll get somewhere between July to September. Let's look at this chart. What we see here is that in the first quarter to the second quarter transition, inflation expectations, 5-year forward, were starting to creep up toward 3%. This is when the Fed started to get aggressive with its hiking. Now, inflation expectations have come down materially back down below 2.5%. This is evidence that the Fed's tightening is actually working, as it brings down inflation expectations looking 5 years forward. In my opinion, I look at this chart for the best indication of how the Fed thinks that it's doing on monetary policy. And right now, this chart is telling them that their hiking is working. And it also tells them that they probably don't need to keep hiking that much more. Now, there's a second answer to this question from Jason, which is that the rates market tells the Fed what to do. So we'll bring back this famous chart that we've been showing throughout the last couple months of the 2-year yield versus Fed funds. And we see that when the 2-year yield comes down below Fed funds, it's the market signal telling the Fed that its hiking policy, its hiking cycle has ended. And so I expect that to happen sometime in the next few months. As that happens, it'll be the signal to the Fed that the Fed needs to stop hiking rates and actually consider cutting them. Now, it will only have to consider cutting them if the 2-year yield and other associated expectations come crashing down. But I do believe that the expectations of runaway inflation are starting to end, and that will bring yields lower. Yields coming lower will show the Fed that it doesn't have to keep hiking that aggressively. Now, Jerry asks a good question. A couple weeks ago, you stated that if Bitcoin drops below 19,000-ish, you'd be concerned and reevaluate your entire Bitcoin thesis. Was that disingenuous? Now, Jerry is actually talking about when I went on Pomp's show This is in the second week of June. And I said that price is truth. I was actually talking about the Ethereum versus Bitcoin cross, which I had written about, trying to show that Ethereum has had lower highs versus Bitcoin over the last 4 to 5 years, showing a decline basically in this trend of the two cryptocurrencies. Now, I also said alongside that because I'm a strict observer of price action and I really believe that price represents the story that we need to listen to, that if Bitcoin goes below 19,500, which is the previous high in 2017, if it goes materially below 19,500 and stays there for a long time, that I would have to reevaluate my Bitcoin thesis. Now, I actually do stand by this. I know that Bitcoin got down to the 17 handle. It's back up above 20,000 today. I do believe that Bitcoin spending a long time below 19,000, where it reached in the last cycle 5 years ago, would be telling the market that this asset is losing belief and it's losing the trust of the market. And that breakdown below 19,000 would be very dangerous for Bitcoin. So I absolutely stand by my comments. I don't believe that Bitcoin is going to spend time below that number. And I do believe that this $17,000 to $19,000 range that we had should represent the lows for this cycle. Now, I could be wrong there, and Bitcoin could go back down below, but I don't have a crystal ball here. What I do know is that I stand by my comments for Bitcoin to spend a lot of time in the teens, and I do mean time, not just dip below and bounce back up in a few days, but actual time with buyers and sellers grinding through a price of Bitcoin in the $15,000 range where it was in 2017. I think that would be a big negative for Bitcoin, and it would really cause me to take a look at what is wrong with the market. Why has Bitcoin lost its belief? Now, I just don't believe that is going to happen, and I do believe that the latest lows will hold, and that we will be back up in this Bitcoin cyclicality that goes through a lot of booms and busts. I will point viewers to the chart of market value to realized value, MVRV. This is a metric that we've been talking about for quite some time and writing about at our Substack publication, The Bitcoin Layer. So we see that MVRV goes through huge spikes and falls throughout Bitcoin's cycle. Bitcoin reached an enormous peak in 2021 of MVRV on this ratio, and it came back down to 1 like it always does. And so I believe that this range will hold, for all of these reasons. Jung asks, as the economic cycle wayfinder peaked several months before stocks went down, will the wayfinder bottom several months before stocks start to rise? So no, actually, we will see the stock market bottom before the economy actually bottoms. And what will happen is we'll see the pace of decline of the wayfinder slow. So right now it's a sharp decline, which we've seen. At a certain point, the decline will get less. So as we're below 50, maybe it goes down to 48, 46, then it'll only go down to 45. Then it'll maybe only go down to 44.5. So the rate of change is what's most important. We want to see the rate of change decline. That's when we'll see stocks start to bottom and come back up. But stocks will be leading, and we won't see the wayfinder actually turn back up towards positive until long after risk assets have done that. Okay, the last question is from Flo. Flo asks, I wonder what the Lightning Network yield curve will look like. Because you can pull your Lightning Network Bitcoin out at any time and not suffer the opportunity cost of locking up your capital, Flo assumes that the yield curve in Lightning will be flat. This is a really interesting point and a great point. I want to separate this question into two parts. One is this idea that when you put Bitcoin into a Lightning Network channel, you are not doing so for any locked period of duration. And because there is no period that you are that you have to keep the Bitcoin in the Lightning Network, there is no way to really set a yield curve right now in Lightning Network just using the open network data. Where you can get a yield curve in Lightning Network is from node operators themselves that can actually test keeping Bitcoin in the Lightning Network for various periods of time. So what I mean is, let's take one of the big node operators that has a lot of open channels and is very active in Lightning Network routing. That node operator can do a test basically and say, if I keep Bitcoin in for 1 day, 1 week, 1 month, 3 months, what is my yield associated with each one of those periods? And then publish a yield curve. So in terms of the outside person being able to look at data in the network and just understand what the yield curve is in Lightning Network, you're right, Flo, in that it's really impossible to tell what the curve looks like, because the best data that we can get is just general data of what the yield is that operators are receiving. It's only with operators getting very specific about the time that the Bitcoin has spent in those channels will we begin to finally find a Lightning Network derived Bitcoin denominated yield curve. Thanks for joining me today for your viewer questions. Keep sending them in. Subscribe to the channel, like this video, and we appreciate all your viewership here at the Bitcoin Layer. I want to thank my sponsors, Zebedee and Voltage. I'm really excited about partnering with Zebedee. They are building what I believe is a really important user experience for people that are onboarding to the Lightning Network. Now, Zebedee is a company focused on the gaming industry, so how does that fit in with global macro? Well, you guys know how much I believe in the Lightning Network, and I believe that what Zebedee is doing is it's introducing the Lightning Network to people in a way that makes them understand why instantly transacting Bitcoin is so important. So check out our Lightning address, the Bitcoin Layer, at zebedee.gg. Go download their new wallet for a great first Lightning Network wallet and get your own Lightning Network address. I'm proud to have Voltage as the sponsor of my Substack. Voltage is powering businesses to be able to run their own nodes, both Bitcoin and Lightning Network. I'm really excited about working with Voltage because I believe they are powering some of the most important businesses in the Lightning Network ecosystem already. Go check them out.